Filing taxes soon? Here's what's changing for 2025 and why 2026 could bring even bigger updates to your refund or what you owe. As tax laws shift, it is not just high earners or accountants who need to pay attention. Filing for tax years 2025 and 2026 will bring notable changes that could affect millions of Americans. Standard deduction increases for 2025 and 2026. Well, the IRS is raising the standard deduction in both years, which means more of your income will not be taxed. For 2025, the standard deduction for single filers and married filing separately is $15,750. Married couples filing jointly and surviving spouses get $31,500. Heads of household receive $23,625. In 2026, those amounts rise again. Single filers and married filing separately get $16,100. Married filing jointly and surviving spouses get $32,200. Heads of household receive $24,150. These increases could affect whether you itemize or take the standard deduction, especially if your finances have changed. New tax brackets in 2026. Tax brackets are also adjusting based on inflation and the new law. These brackets determine how much tax you pay on each portion of your income. For single filers, the 10% bracket goes up to $12,400, while the top 37% bracket starts at $640,601. For married couples filing jointly, the 10% bracket goes up to $24,800, and the top rate begins at $768,701. Heads of households see the top bracket begin at $640,601 with adjusted income ranges across all tax rates. Even small income changes can move you into a different bracket, so it is worth knowing where you land. Bigger earned income tax credit. The EITC increases in 2026 for lower income families. The maximum credit for households with 3 or more qualifying children rises from $8,046 in 2025 to $8,231 in 2026. While the increase is modest, it can still boost refunds for eligible families. Income, filing status, and family size all matter. Higher estate tax exclusion. In 2026, the federal estate tax exclusion increases to $15 million, up from $13.99 million in 2025. This higher threshold means fewer estates will owe federal estate taxes, especially those with large property or investment holdings. Expanded childcare tax credit for employers. Starting in 2026, the employer-provided childcare credit jumps from $150,000 to $500,000 and up to $600,000 for eligible small businesses. This change could lead to more workplace childcare benefits, helping working parents reduce costs. When it comes to preparing for these changes, start by checking your withholding and updating your W-4 if your income or deductions are changing. Then, review your eligibility for credits tied to income or family size so you do not miss out. Finally, adjust your savings and budgeting plans if your tax bill or refund is likely to change. The bottom line is that the tax updates for 2025 and 2026 could change how much you owe, how much you get back, and how you plan your finances throughout the year. Understanding these rules now gives you more control and helps you avoid surprises when tax season arrives.